Welcome back to Connect with Christina, and today's special guest is my homie, Daniel Jaramillo with Right Away Lending.
Hello, how you doing?
What's up?
What's up?
I swear we were brothers in the past life and the future life.
Yes.
It's like that. I have a bunch of questions today, but I'm going to start with the company because obviously from the outside looking in, you're making it happen. Like you are doing it and people adore you, respect you. There's a lot of mortgage companies out there, but you're actually a broker. Mm-hmm. And for those who might not know the difference, explain that. And also, I'm going to go right in. Why are you different than all the other ones?
Well, so yes, you're right. We are a broker. I'll just explain the difference between a broker and just a normal retail bank or a banker. We're not available to the public. Well, the lenders that we have are not available to the public. So people, they want to get access to the wholesale rates and the better pricing. They will go through someone like us that specialize in mortgages, and we have that access to obtain those better pricings. I think what separates Right Away Lending from a lot of companies is that I was born and raised here in Phoenix.
Rare.
Yep, Maryville. And I was born and raised here, and so I've been in the business for 24 years. So my experience as an owner, I see a lot of owners that maybe come in. There's a lot of owners actually don't even have experience in the mortgage world. They just know business, right? So me having that experience, being able to provide that level of support to my employees, having a good name within the community, doing a lot of things, anything from charity to hosting giant events with hundreds of agents or loan officers. I think that's what separates us. And then on a daily basis, I'm always trying new, different ways to keep my name and our branding out on the forefront, trying different techniques. And there's always risk versus reward, right? Some things, work, some things don't. But also, I think the biggest thing is where I've seen my biggest change is networking with business owners and trying to help, cross-brand, cross-promote, and just doing good by helping others and trying to bring their brand to the forefront and putting myself to the back burner is what actually has brought me and elevated my company.
Are you listening to that? For
Yeah.
the people in the back?
Yeah, sounds like somebody I know. Yeah, so I think that's one of the biggest things, and I've really taken that, made that a very important part of myself as an owner, and I think it's important to help other owners because it's not for the weak-minded or it's not for the weak-hearted, and I understand their pains, their sacrifice. A lot of people think when they see you on camera every day, or myself, they think, oh well, this is fun, like I would like to do that. They don't see all the things that we do on the back end where we're in our own bedroom just stressful.
Mm-hmm.
And so the end product it's really fun, and it's always a different day, and it's fun and exciting.
I have a cousin in California that's also in mortgage, and I don't know the business obviously, but it seems like life, it's like ebb and flow. What are some of the new things right now happening in the market?
Some of the new things, which I think the one that people are always waiting on, is what's going to happen with the rates, right? And one of the newest things that just came about is the interest rates on 5-year fixed products, which have been pretty much the same pricing as a 30-year fixed mortgage. The 5-year fixed products on all government loans, they literally just dipped to where I just priced out a couple loans under 5% the last couple days, which we haven't heard probably for two years maybe. So that's very exciting. The creative financing was really big. I told you that I work with a lot of business owners. Mm-hmm. The creative financing is really new, and it's big because a lot of people had to resort to private money and get these 11, 12, 13% interest rates. Well, we have programs now for business owners because, let's face it, business owners, they write off a lot of expenses. They can't show that proof of income like regular homeowners can, or regular W-2 workforce can. So we could do bank statement loans now. We could do loans where you just provide a profit and loss letter to show your profit and
like
loss.
your taxes every year too.
Exactly. And so that's really big now.
And do you look at the ROI, NOI, or do you look at the actual, you made $5 million?
We just look at their profit, whatever that is. The bank statements is really big because instead of having to put 20% down like a hard money private loan, you could put 10% down, and all they look at is what are your deposits every month. So, that's good. Like, I'll give you an example. I have a salon owner that I did a loan for. she deposits 35 grand a month in her account, but on taxes, the profit was like $3,000 for the year. So we went off the $30,000. The rates are a little bit higher than a traditional loan, but it's still 3 or 4% lower than getting private money somewhere else. And you only have to put 10% down instead of 20. So that could save somebody 100 grand right out of their pocket.
Right.
So it's very big. We do a lot of stuff with foreign nationals, people that maybe might be from another country. They only have an ITIN.
Oh, that's a big one.
That's really big. Canadians are really taking advantage of that right now. If they don't have a social security number, they just have the ITIN. We can just go off of a passport. We could do that. And they provide the passport. A lot of them have free and clear property here in the States, and they want to cash out and take that money back to Canada and invest. A lot of them are taking advantage of that as well. So that's a lot of the new cutting edge creative financing things.
Is that like new this year?
It's not new this year, but it's starting to become, the underwriters are starting to release more and more products on a daily basis. But the bank statement loans, they started, I'd say probably within the last 6 to 18 months, they become real prevalent. But a lot of loan officers, they don't have, like, for example, I'll give you an example, is these bankers or people that have just one set of underwriting guidelines, they can't do the bank statement products.
They can't, right.
They don't have the option to do that.
Which it's kind of crazy because you're right. Like people that own businesses, in their head, it's just programmed. You're not W-2, so you're going to be subjected to a higher deposit, higher interest but they don't know about this.
Correct. And we could also do stated income programs too, where as long as you have 9 months of reserves in your bank account, all we need is a verification of employment that you're still working, and we can get that done on a primary residence. It might be like 8 or 9%. However, it's better than not being able to invest into real estate at all, right? So there's just a lot of ways out that people just are not aware of. And so the more that we can put that education out there to the public, the more and more people will contact me, and they're like, well, nobody told me about this before. And usually people don't tell you about that because they don't offer it.
That's why you have all these options.
Yes. And that's what's also helped me too, is that even if I can't offer something, which is pretty rare, I will still try to help them find that option and look out for them for the future, so I can still be top of mind for them when something happens later.
So, but on that stated income, or like whatever you called it earlier, the creative financing, like, is that still around the 8-9%?
It is.
As opposed to what?
If they go to put a full documentation loan together, the average rates right now are about 6.719, so it's not that far off.
So then I'm saying when it goes down again, then that part also goes down.
Correct.
Like it's together.
And you could refinance that. So like the bank statement loan that we did 8 months ago, where rates were really peaking, that was at 8.25. Right now I can refinance that down to 7.25, and on a $500,000 house, that might save them $500 or $600 a month on their house payment.
So let's say someone buys a $3 million house at that rate, right? But then the market gets better. Is there a limitation of time or requirement of time before they can refinance?
They have to make 6 payments. So once you make your 6th payment, you can refinance.
You can. And that people can do that.
Absolutely.
There you go, guys.
And skip 2 more house payments too.
Yeah. That's right.
It's a lot of money.
I remember like in my friends in their 20s, that was like a thing. You know what I mean? I mean, seriously, when you're just starting out a family, you're like, wait, I can skip 2 payments. I'm going to refi,
Absolutely.
And then how about like, do you work with like other programs too, like lower income, first home buyers programs, obviously?
Most definitely. We have a ton of down payment assistance programs, grants. You have people that come in. I mean, I have people that come in. All they really have to pay for is a $600 appraisal, no money out of pocket. Rates are slightly higher when you do down payment assistance. So I always like to show people, because some people will have 20 grand in their bank account, but they're like, that's my savings.
Yeah.
I need to, upgrade my house or buy furniture. So I show them the pros and the cons. Okay, this is how much your payment is with the down payment assistance. This is how much your payment is without the down payment assistance. And then let them make that decision. You could just lead them there and show them, the risk versus reward on that, pros and cons. And, there's always options. And that's really, really big.
On your side of things, have you ever seen a deal go south, like where information was maybe not submitted to you? Like, what does that look like? And has that happened?
Yeah. So there might be something that I wouldn't say the customer's doing it on purpose, right? Sometimes people don't realize. Yeah, they might go get a car a week after they do their application with me, and they finance a car. They never
Don't do that.
Yeah, don't do that. Now, here's
Let
the
it
thing.
close.
Or what I always tell people is just tell me. Then I could say, okay, look, your debt to income, even if you go get a $600 car, it's not going to affect your loan. It's not going to kill your deal, because when we run your credit, that credit report is the score itself is still good for 90 days. Actually, once the loan is submitted, we can get it for 120 days. But these banks have the software to see if you've got a new car on your credit report, even though it's not showing up on your credit for until your first payment's made, they can see when you get a new bill in your name, and that'll automatically count towards your debt ratio. That's a big one. Child support is another thing where somebody might have child support that doesn't show up on their credit report, but then it's on their paycheck stubs. And, yes, we get their paycheck stubs and we're supposed to see that child support coming out of there, but that's just it's very easy to miss something with all the FICA, Medicare, Social Security, all these different things that are itemized. It's easy for that to come out. Or they might be late on their child support. Mm-hmm. We don't know that, right? And a lot of times people are late on their child support. It's really not their fault. Let's say, a father goes and he starts a new job, right? And the child support's getting garnished each paycheck. If they go start a new job, well, that garnishment is no longer coming out of the new employer, because DES has to get with the new employer. So now they're 1 month or 2 months in default, which is not a bad thing. We just have to go back to the DES and get, proof that that we're good.
Right.
So there's a lot of avenues with that. I have a lot of clients that were late on their child support, or they're paying arrears, so they don't think they can get financing. Well, the lenders will allow you to do a loan if you are paying in arrears, like if you owe back child support.
But you're handling it.
As long as they're paying that arrears payment on time, they don't care that you have back due child support.
There's just, I feel like, a lot of things people don't know, and sometimes the not knowing, they get in their own way, where there's a lot of people renting where they could already, try to get their own home. Do you welcome them to reach out to you and see if they qualify, so you can prepare them? Hey, you're going to take 8 months, 12 months, 6 months to get where you are?
100%. That's a good question, because I was actually just on a live, I do a weekly real estate talk with Two-Tone the Superstar, who's actually a good friend of mine, but he has a very big following, and he has people from all over the country. And I had a guy that actually just reached out to me a few days ago and said, "Hey, I know that I'm not going to give you money right now or business right now, but can you help assist me on getting me on the right path a year down the road?" I'm like, "Sure, let's do it." So we went. I had him pull his credit report through Credit Karma, and I went over all his debts, and I looked at everything, and I said, "Hey, make sure your credit cards are under this percentage of the usage, and make sure that you have this in line. Make sure if you have medical debt, go, I'll show you how to dispute those things and get those deleted. All those things I help you, and it's no cost. It's just more of
preparing you.
Yeah, and who's not to say that somebody doesn't have a conversation around him saying, "Hey, look, I'm going to go buy a house." He's like, "Man, that guy helped me, even though I wasn't trying to, it's not business right now. That could be a future outlet for business later on."
Mm-hmm.
You know what I mean?
Well, and I feel like, the time frame of or the age group of 21, 25, I want to promote the idea that they should already call someone like you. They should already call you so they can prepare.
For sure.
Right? Because you talked about credit. When you said, get your credit used under this percent, I'm curious, what percent is that?
You typically...
Let's say, easy number. The credit card's $5,000. Okay.
Let's say it's 10 grand. Let's just make it an easier number, right?
Okay.
$10,000. If you want to make sure you're maximizing your credit on that credit card, you want to stay under $3,000 of the balance of that limit. So 30% is really that target mark you really want to be under to maximize your credit. Okay.
Because of the way it shows up on your...
Correct.
Remember, guys, we didn't learn any of this in high school, so this is your education now.
Yeah, we're pushing for the curriculum to be changed, on a daily basis. It'll help everybody out.
But it's true though, people learn as they live, and I want them to learn and be armed with information like this because we weren't. So go ahead, 30%.
So 30%, you really want to keep those under, right? What I encourage a lot of parents to do too is, not always just co-signing for their kids or doing this or doing that, but they can, if a parent, let's just say a parent has a credit card where they have a $10,000 limit, $100 balance, but they've been paying that on time for 10 years, let's just say. If they add their child onto that credit card as an authorized user, that payment history from the very first payment that parent made automatically transfers over to that child's credit. So your child at the age of 18 can have a 700, 800 credit score before they even get out to the
But if you're
real
late,
world.
do not transfer it to your child.
Yeah, if you're late, do not transfer. Now, here's the good thing. Children, if they are late, you can just remove yourself as an authorized user too, so it'll come back off.
There you go.
So, but that's one key thing I think parents could do to help, help their kids start out without having to give them money or,
Right.
Those are the things they could do for them that don't cost a thing other than just, helping them out, start off on the right foot for the real world, because it could help them finance a car. It could help them, it just makes you look better in every facet, It's very
And I
important.
bet you people didn't know that they could add their child and it'll transfer over.
Most people think they're just using them as an authorized user because they want to go spend money on that card. So then another good thing too is the parent, to keep yourself safe, just make sure that card's shipped to you. Like, put your address on there. They don't even have to have the card. You can put it on your own. It's just for building their credit, right? And I think that's huge. A lot of people don't know it. Actually, I'd say 99% of people I talked to didn't know. Most loan officers or professionals didn't know that the history automatically transfers over. Now, and it's only with credit cards that are like Visa, like universal credit cards. It
Not
can't
like a shopping store one.
Exactly. Like, the mom can't be like, okay, I'm going to add my daughter to my Victoria's Secret credit card. You know what I'm saying?
It needs to be like a general one.
General card, Capital One.
Visa, American Express,
Exactly.
MasterCard.
Exactly.
Gotcha. And then back to credit. What do you guys look at with the FICO score?
So that's a good question. So government loans. So everyone has a stigma about government loans. Like, oh, well, I don't want a government loan. Well, it's not like we're providing like Section 8 or some type of assistance in that manner, right? Government loan, it's just different entities that are servicing that loan, right? Fannie Mae, Freddie Mac, and FHA, VA, USDA. Okay, so FHA and VA, they have a more aggressive approach to credit. So we could go down to a 580 credit score. Technically, we could do a 500 credit score, which I really don't like to touch because that's a high red flag for somebody defaulting on their house. But they do go down to a 580 credit score. 620 is where you really, really want to be to get all the automated approvals through the system, and you don't have to like provide all this
Across the board or just with the government? Like,
just the government.
Okay.
So FHA and VA across the board is more aggressive. Okay. Veterans, we could do even a 580 credit score as well. And typically they have a little bit easier of a chance of getting a loan because veterans, they don't have to pay mortgage insurance, which is an extra $200-300 a month in house payment. And there's no down payment whatsoever. So that's really big. Conventional is going to be a little bit higher credit scores. There's more of a less leniency on the debt to income ratio. You can only go up to 50% as opposed to VA. I've done a VA loan at 79% debt to income. FHA goes up to 56.9. So that debt to income, and we could talk about that in another segment. It's just going in too deep, but more aggressive FHA, VA. Conventional is more your higher end, top tier credit, 680, 700 or higher credit score, higher down payment, 5% or more. FHA, VA, 3.5% for FHA down payment, 0% for a VA loan, right? And that's another thing. Call out to the veterans. Like, a lot of veterans don't know any of their benefits. They don't know. A lot of them don't even know.
And you deserve these benefits for serving.
Absolutely. Like, they should be doing this today. They get 0% down, but there's no hits for interest rate because they're veterans. They have no mortgage insurance. They have a lot of them have disability, so then they don't have to pay a VA funding fee, which is usually like 2.15% of the loan. If you got a $500,000 house as a veteran, there's a $10,000 fee that you finance that the VA charges. If you have disability up to a certain percent, there is zero cost for it. Which, shout out to Sergio Morning, one of my good friends. He actually helps veterans increase their service-connected disability, like war veterans who've been injured in the line of duty.
We want them here.
Yes, we want him here. He helps a ton of veterans, and he'll get them from 30% disability up to 100% disability, and it helps. I mean, it could save them. It gives them an extra $3,000 a month, $4,000 a month. So we really help the veterans out. We really want to educate them. That's why we actually, myself and my friend and the real estate agent Nick, we came up with the VA Playbook, which is a master guide of all your benefits for real estate for veterans. Literally, it tells you every little term and just things that you have to your benefit that a lot of people don't know. Most people don't know that if you have a VA loan, that you can use your VA home benefits. You can actually go buy another house with the same benefits.
No one knows that.
Yeah, you could buy 2 or 3 VA homes with the same exact certificate of eligibility up to, I think, $806,000 on
That's
that.
nuts.
Yeah. So veterans, any veterans who have any questions, give us a call. We'd like to help you along the way on everything.
Yeah, and we'll have you actually back again for that. But on the business owner ones, back to that, what kind of credit do you look for on that one? If it's the creative and the stated bank, whatever.
We can go down to a 640 credit score on that stuff. From what I've seen, a lot of these business owners, they've been a little bit more on the higher credit side. They seem to be, especially ones that have their taxes where they have the expenses and they've been in business for several years. They really do everything in their power to keep their credit because they a lot of times need business financing or they have to get a merchant account, those types of things. So a lot of times their credits are usually higher. And if they're not, we have resources for that as well.
But your typical is 670. So it's not even like 800.
No, it doesn't have to be that high. I mean, really the top tier, if you're over a 720 is really like the top tier. If, I have somebody that, I was like, well, your score's a 780. They're like, well, I want to wait till I'm back over 800. I was like, it doesn't matter. You're still at the top. Right. So, but that's good just to be able about your credit background.
You know what I want to bring to the podcast too is like someone who can help other people fix their credit. Because I'm not joking. We weren't taught all these actual things we need in life. You talked about using 30%. 30%. My dad, who's an accountant, it's like, gave us the habit of if you use it, you better know you're paying it that day. So it's not,
But I will tell you, keeping your balance at zero is not always good either.
Right. That's what we learned too.
You know what I mean?
Because
so
it's like you gotta use it.
There's no history. Right. So people think, oh yeah, I just paid off my car. Well, your score probably went down because now you're just showing that consistency of making payments on a monthly basis.
So you gotta let it hit.
Gotta let it hit.
Because I think it's like the idea of I don't want to pay interest rate. Yeah. See what I mean?
But just keep the balance, and even if the balance is $10, just keep it there every month.
Right.
If there's a payment, that's all that's important.
Right. Yeah. So I think we got to break that down because people are making those mistakes early and then having to learn the hard way. Justin's flagging me. I only have a few minutes. So enough about mortgage. Okay. We know you're a badass. You know it like no other. And if nothing else, work with this guy because he's a really good guy. Real family man, and he honors his words. What he says, he will do above and beyond. But for me, I want to know why the hell you are this way. You were such a homie. You are such a good person. You have a background. What is it? My
background?
Yeah.
So I grew up very humble, right? Okay. We grew up, I think in high school there was 5 of us. We were in a 2-bedroom apartment. And my parents, my dad was working in construction and landscaping. My mom was actually a private investigator for DES for several years. And, we didn't always have a lot of money. Me and my brothers would be sharing Goodwill clothes throughout high school. And we made it look good, though, right? And so, but we were happy.
Swagger and rico suave stuff.
Yeah, we had the creases on all our clothes and stuff. I still had the 3 flowers in my hair. I don't have it now. I have gel. But yeah, where we grew up, I grew up like, 59th and Encano, 75th and Indian School, right in that area. So it's not probably the roughest neighborhood, but, things happen on a daily basis. And we just learn to just persevere and, work hard. So I've always worked really hard. My dad and my mom are still together. They're still alive. They've been great at just staying in our lives, attending every game. I think my dad's never missed one football or baseball game my whole life. Even if he was coming straight from work in his grass stains or whatever, maybe sweat stains, he would always behind the backstop, whistling at me at home plate when I was catching. So I just was very grounded. I had a good foundation, we have a new grandkid now as well, so we're very family oriented. I have 18 nieces and nephews. So 18, there's 18 nieces and nephews in the family, and it's just growing every day. And we all try to make it at every, holiday because, you never know when someone's going to be here. Right. I've lost 7 of my 10 best friends. I've lost 7 of them either to gun violence or, drugs or, health situations. Right. And so we're getting at that age where you're starting to lose even more people. And so I just appreciate, life in general. And my biggest thing is that I've been in this business for a long time and been successful, the finance part of it, but that doesn't really make me happy. It's when somebody else doesn't have something or you help them overcome something.
Help them get a dream home
Help them get a dream home. That makes me happy as well, for sure, because that's the same category. But, if somebody's dying from cancer and you're there for them through their hardest times, when you see other family members that are just not around and you're helping them through that, and they say, man, thank you. You've helped my family pay our bills for the next 6 months, by doing this, spending hours and hours of my time doing that, or coaching kids that don't have parents around, those types of things. That's what really makes me happy. So that's why I am the way I am, is because I know that tomorrow's not promised, and I don't want my name to just go away when that happens. I want it to be like, well, he made a little bit of a difference.
Yeah. Even when I met you, the first or the second conversation was immediately. Actually, it was the first conversation. Hey, I sponsor this charity. You want to be a part of it? So I know that to be true. Also, I feel you have a very solid relationship with your beautiful wife, and I admire that. Mm-hmm. And I want to recognize that, because you guys are just like best friends too.
Yeah. Not every day of the week, but yes, we've been through a whole lot, and through thick and thin, we have 4 beautiful kids. We also have 1 adopted child, and since the age of 4, she's going to college, this year as well. And, my son's actually, we just enrolled him in NAU. He's going to be moving next week. They're all 4.0 grade point average students right in that area. And so we're very proud of that. It's like a pride and joy that we were able to do that. They want to be with us. Sometimes I'm like, go out, go hang out. And they want to stay with us,
That's very telling.
Yeah. Actually, a good story is my son actually, a few months back, he actually wrote me a letter, left it on my nightstand, thank you for everything you do. We found out from his girlfriend's parents that when she was looking for a new job, he prays for her on the phone that she gets the job.
Wow.
So those are the types of things help me, help us out.
Planting your seed, and now you see it.
Yeah, exactly. I'm when they're better than you are, that's a good feeling.
Mm-hmm. And I think as a parent, that's what you want. You want kids better than you.
That's all we want.
Yeah. I'm just going to add that I didn't even know that you had an adopted child, and even more respect to you, because kudos to all of you out there that have either foster kids, adopted kids. That just shows your heart, and, that's huge.
No, it is. And she sometimes she helps us more than we've helped her, right? In a way, because it is a struggle, right? Because it's, the connective bonds, those things when you already have other children, and, overcoming those things and just learning how to handle that and know that there's things that affect them that we have zero control over, so it's a challenge that you have to overcome. And it's been great to see how she's ended up.
Well, before we say goodbye, you said it best. We're lucky to be aging.
Yes.
We lose people along the way. So you get to leave a message here for Sarita.
What?
And you get to leave a message for your kids. Sorry, that's the deal.
Leave a message for Sarita?
Yep. This is permanent on the interweb, so take your time.
The message I want to leave Sarita: thank you for being such a great mother to our children, and being the rock of the family, and being the person that they get mad at sometimes, because you hold true and hold them accountable, when I'm always like, yes, go ahead, and try to be the Mr. Nice Guy all the time because I'm so busy. So thank you for that.
And the kids?
Oh, and the kids, keep doing what you're doing. The journey is not over. You guys still have some years till you get to the real world. So, I love you guys, and I'm really proud of you guys.
And lastly, your parents.
My parents, I love you guys.
What's their names?
Ramon and Carol. Yeah, so I love my parents. Even though my father got me kicked out the Super Bowl in 2005, I still love you, even though I lost my money for that. But I love you guys. Thank you for providing for me and allowing me to be who I am today. Thank you.
Tell everyone how to get a hold of you, please.
All right, so if you want to get a hold of me, Right Away Lending, Danny Jaramillo, you can give me a call at 602-465-2800, or you can catch us on the web at rightawaylending.com. But the easiest way, and we're on social media 24/7, Instagram at Right Away Lending, Facebook at Right Away Lending. Give me a call, shoot me a text, or DM us. Have a good day.
Bye.